Welcome back to Morning Trade Live. Supermicro saw a huge AI-led rally, but has since tumbled. What's next for the stock? Joining us for that is Stacey Sears, portfolio manager of Emerald Advisors. Stacey, thanks so much for joining the show.
Thank you for having me.
So if you just take a look at the year-to-date performance for Supermicro, it looks a little impressive. Shares are still up 45% year-to-date, but if you take a look at the chart and see where it was trading back in March, it's really had a fall from grace. It's had a pretty flat performance, I would call it, since September, though, early September. So is the worst behind Supermicro?
We've known Supermicro and have been investing at different times in the company over the better part of the last decade. And I think you highlighted correctly that they were positioned very early to capitalize on the early stage server build out for the AI infrastructure build. Their ability to customize servers based on the workload requirements of the individual hyperscalers and do that with a very quick turnaround with that relationship that they had with Nvidia, I think positioned them very early on as a market share gainer. We continue to believe that they're in a position to maintain and gain market share as we move forward, particularly with the next gen launch of Blackwell, which is Nvidia's next generation chip. They have a liquid cooling technology, which we think is going to advantage them in this second leg of the AI build out. In the short term, however, the stock has been overshadowed by a delayed 10K filing. There was an article in the Wall Street Journal in the last week or so about a potential DOJ investigation. That has not been confirmed by the company at this point, but we do think in the interim, those issues are likely to overshadow the fundamental performance and would wait for some resolution of those certain factors before we would look to invest in Supermicro. But we are very optimistic on the long-term fundamentals of the business and believe the valuation is attractive with where the shares are trading today at right around 12 times forward earnings.
There was also that scathing short report as well. So not a buying opportunity just yet until it crosses some of those hurdles. But ultimately, do you see this name getting back to its highs? Back in March, it was trading, near $120 a share?
That's correct. I think it's difficult to make an argument at this point that we're going to recapture that $50 billion in market valuation in the near term. But we do think longer term, based on resolution of these issues, and again, our belief that they're in a strong market share position, that there is potential for them to recapture those levels in the next 2 to 3 years.
Okay. I was just taking a look. Median price target on Wall Street has come down to $65 a share. Still implies, $25 upside from here. All right. In terms of what you would buy right now, it sounds like you like small cap stocks. In particular, biotech in the small cap space. Tell us why.
Sure. So we've been long-term investors in the biotechnology industry. As a firm, we've invested in the resources internally. Biotech historically, very idiosyncratic. It's been an area that's been under pressure over the last couple of years, particularly with the rise in interest rates. The market has really leaned out of longer duration stocks, concerns over cost of capital increases. All the while the market has really been looking in the other direction, what we've been experiencing is a pretty significant uptick in drug development. And we're finding just a wealth of opportunity in the space as these companies continue to progress against their clinical objectives. So one of the names that we're looking at right now, a position in our portfolio, is a company by the name of Wave Life Sciences. They are developing RNA therapeutics. Really innovative. We're out, released results in the last week or so in a trial for Duchenne's muscular dystrophy that have really driven nice appreciation in the shares. We believe that this is the first of many forward catalysts. The company will be out later this year with the first in human trials of an RNA editing technology for a disease called AATD, which has liver and lung manifestations. This could be a real game changer for the industry. And then we see another catalyst with an early stage trial in obesity that will also be getting underway as we move through this year. So in aggregate, very optimistic about the opportunities within the biotechnology industry.
The only issue, WVE, is currently up 70% year to date. It's up about 3.5% today. So you would still buy at these levels?
Yes, we would. We are, again, very optimistic at what the potential outcome of this new data. Again, first in human trials and RNA editing technology really has the potential to be revolutionary if successful. Biotech, as you know, is not without risk, but the risk is an opportunity. We believe the shares could trade towards $17 in value if the company is successful, as we believe they will be in this proof of concept study at the back half of this year.
All right, so it could potentially double. You also have a pick in the tech AI small cap space, and is it Credo Technology Group, CRDO? Tell us why you like this one, because this is another one that's already seen impressive year-to-date gains, up 54% year-to-date.
It has. I continue to believe, we continue to believe internally as a firm that we're really in the early stages of the AI build out. Much like the early days of the internet, you were really unable to maximize the utility of the internet with a dial-up connection. And I think we're in the same place with AI. We really need to re-architect the entire compute infrastructure. And Credo is a company that's contributing to that re-architecture. They have connectivity technologies based on their proprietary SerDes technology patent portfolio. The main product of that today is a product that is called active electrical cables. These cables are used inside of the data centers to connect the servers within racks and amongst the racks. We believe this is revolutionary. It's replacing passive copper cables, and we see a long tail opportunity, not just with the active electric cable piece of the business, but as the balance of the portfolio, optical DSPs, line card PHYs in the Ethernet area really start to accelerate. So unlike Supermicro, we believe that this company at this point in time is attractive opportunity, well positioned, and that growth rates will accelerate from here.
Does your bullishness in small caps mean that you think this is an economy on solid footing and that the Fed can achieve this soft landing?
As we sit here today, yes. And I think that's the key component as to the success, what we believe will be the forward success of small caps. The Fed has finally moved in our direction. That has been a headwind over the last couple of years as they embarked on that rate hiking cycle. That's been a negative for the asset class. The other piece that has been a negative for the asset class really has been that underlying earnings growth hasn't been there relative to large cap peers. We feel like that's starting to inflect. And with economy in a soft landing or no landing narrative right now, which we have confidence in, consumer seems to be hanging in there. Employment is softening, but not overly weakening. We're optimistic that with those two pieces coming together, that we're going to start to see a revaluation in the small cap asset class, which has underperformed for the better part of the last 3 years.
All right, we have to leave it there. Stacey Sears, Portfolio Manager, Emerald Advisors. Thank you for your insights. Thank you for your picks.
Thank you. Thank you for your time.